G'day. Thanks for watching. Let's take a serious look at the Dow. It's not going exactly where my interpretation of the cycles suggests. So this is a fabulous opportunity to firstly acknowledge that as cycle analysts, we have a sense of when we're wrong. And the key to that is our cycles forecast coming trend. If we get it right, if we get the phasing right, if we get our analysis right, we can forecast coming trend. When price goes other than where we've forecast, we need to take a pause and reflect on our analysis. The cycles are always right. The market is always right. It comes down to our interpretation and the way that we have our phasing set up. So out here on the monthly, what are the possible alternatives? Well, one possible alternative from a very large time frame perspective is that March 2020 wasn't the 18-year cycle low, and in particular wasn't the 90-year low. Now, the 18-year cycle, it's come in pretty right, and the 90-year cycle is only missed by 2 years off 1932. Quite acceptable. However, the alternative is October of 2022. Now, that's spot on from a 1932 perspective. And why would we consider this as a possibility? Well, in comparison to the COVID drop, the drop into 2022 was greater in terms of time and around about approximately the same in terms of price. From a bounce perspective, the 2022 low has lifted out for an extended period of time without any major pullback, although it's your definition of major. I don't think the pullbacks have been major, certainly not compared to the low in 2020. And there's a situation that occurred in 2020 where the 18-month low occurred in 2021, and then a lower 18-month low, which we're calling the 3-year, that was a lower low in 2022. Now, cyclically, you wouldn't really expect the second 18-month low out of a large low to be lower. So there's some question marks out on the monthly. One of the most important skills in cycle analysis is knowing when to pause and reassess assumptions. If you'd like to understand how cycle phasing and alternative counts are evaluated, there's more educational material available at futuremechanics.com. If we go to the weekly and we make the assumption that the low was in 2020, the 18-year low and the 90-year low, and we work on from there, we've had a 6-year low in April of 2025. Well, March 2020 to April 2025 is only 5 years. So the possibility exists that the 6-year low may still be coming. And when we come down to the daily, let's bring in some data. We have a hesitation that's occurring here, which is a little bit unusual in that I would have expected the lift out of the 20-day to go higher and for longer. Now, it did break new all-time highs. It has made a high after the 20-day low. That suggests that the coming 40-day low should be a higher low because that 40-day cycle will be right translated. It already is right translated because the highs occurred after the 20-day. So this is clocking along cyclically, okay, but sometimes we need to just reflect on what the alternatives might be. And the reason for the concern is not on the Dow, it's what we're seeing on the S&P and the NASDAQ. I will dive into those in the next video. Thanks for watching.